Hi everyone, I'm the Tax Pro, and today is day 3 of our 90 Days to Tax series. So what we're doing is showing you how to get ready for tax season in 90 days. And today we are talking about record keeping. So how long do we keep records? What kind of records are we keeping? What sort of formats do those records need to be kept in, right? So let's talk about first the type of records that we're keeping, and then let's talk about time period. Time period is going to vary a little bit depending on type of record. So when it comes to records, we need to be keeping a lot of records in order to substantiate the information on our tax return to the IRS. We want to make sure that we are keeping receipts. So receipts for purchases can include things like actual credit card receipts, copies of checks where you've written payments, any sort of purchase order that you've sent to companies, bills that you have received, that kind of stuff. All those need to be kept, and they don't have to be physical copies. So if you receive a physical copy, you can go ahead and scan it and then save an electronic version of that receipt. I like to scan it and keep the electronic version. One, because it's really easy to duplicate. I can save it in multiple areas, so I can have a receipt software that saves it, and then I can also back up those receipts, and I can keep them in multiple areas, right? So the receipt software, I'm going to keep it in the cloud. For the receipt software company, I can back those up onto a USB, which I can keep a copy of the USB in my office, keep a copy at my house. That's 3 separate areas that I'm storing these electronic receipts. And if all 3 get destroyed, that would be extremely unlikely, right? So that's why I like to do it electronically. It takes up less space. You're not consuming a bunch of paper. And realistically, a lot of vendors don't provide physical receipts anymore, right? We get a lot of vendors that provide electronic copies of receipts or receipts via email, that kind of thing. You don't have to keep the physical copy of the receipt if you have saved electronic versions of it, okay? You've scanned it and you've saved those copies. The IRS will accept electronic copies of those receipts. It's really important, though, that those receipts show what was purchased. So the IRS is going to be looking at those receipts to see what exactly you purchased from each vendor for a number of different reasons. One, to make sure that it's a business expense, but also to make sure that it makes sense for your business, right? So if I'm going in and I'm purchasing what I've decided is a business expense, and I've purchased a bunch of exterior furniture, and I don't have any sort of patio tied to my business, that's going to look a little weird. So the IRS wants to see the actual receipt with the itemized information on what was actually purchased. And then you do want to keep bank statements, but those aren't a replacement for receipts. I get that question a lot on whether or not customers can use bank statements in kind of in place of receipts. And the answer is no. You do want to keep your bank statements because it provides a nice, clear picture of all the purchases and all the deposits for a specific time period. However, the IRS can't determine what was purchased based off of bank statements alone. For example, I could spend $2,000 on Amazon. It may be for a computer I'm using in my business, or it could be because I wanted to buy a bunch of gadgets for my kitchen, right? One's deductible, one's not. The IRS can't tell just by seeing that line item that says Amazon on it what was actually purchased through Amazon. So it's really important to make sure that you are keeping the actual receipt with the line items on it. Make sure that you're keeping any sort of shipping documentation for anything that you've purchased, shipping, packaging slips that tell you what is in there that you can match with POs and bills. You want to make sure that you are keeping any POs that have been sent to you from customers that then turn into sales orders. You want to keep records, your bookkeeping records. You want to back those up and keep those as well. I generally recommend a profit and loss, a balance sheet, general ledger, and then statement of owner's equity if you have one, just as kind of a bare minimum of what you keep from your accounting system. Pull those reports and keep them for every year. That helps tie into your tax return, and you should be able to tie your business accounting system to your tax return. That's actually required for a lot of business returns, such as a partnership, S corporation, C corporation. There are schedules that should tie to your actual books. So make sure that you keep those. I'm going to show you on the IRS website what the IRS says about records, and then I'm going to tell you kind of how my recommendation differs a little bit from that. So this is right on the IRS website about what you should keep. So this is going to talk about periods of limitations. So in general, they're recommending that you keep records for 3 years from the date that you filed the original return, or 2 years from the date you paid the tax, whichever is later. However, the reason that they're saying this is because the IRS has 3 years to audit generally, okay? They can extend that if they think that you've underpaid income by a substantial amount, and they can extend it indefinitely if they think that you filed a fraudulent return. So 3 years is kind of this audit window, but they can go beyond that if they choose to. My recommendation is to keep the receipts in the records a minimum of 7 years after you have filed the tax return and paid the tax, and anything for assets that are going to be carried forward onto future tax returns, keep the documentation for that asset for at least 7 years after you have filed the last tax return that asset applies to. Okay, so if you've purchased the asset in 2000, but that asset is still on your tax return in 2024, you need to keep the records. Even though we've gone beyond 7 years from when you purchased that asset, you need to keep the records for at least 7 years after you've disposed of that asset. So after you've gotten rid of it, you've sold it, it's become worthless, and you've recycled it or whatever, however you dispose of that asset, you need to keep records for 7 years beyond that tax return where that event happened, and 7 years beyond when you paid that tax, okay? At least. And that sounds like a lot, but when you electronically keep your records, it helps kind of mitigate that burden. So the IRS, right here says keep it indefinitely if you do not file a tax return, or if you file a fraudulent return. That's because the IRS has the ability to audit those returns indefinitely. I think it's kind of funny that the IRS tells you to do that if you file a fraudulent return. And then right here, employment tax records can be a little different. You want to keep those at least 4 days after the date that the tax becomes due or is paid. However, there are certain employment records that you should keep at least 4 years after that employee no longer works for you. Okay, any sort of verification of identity and eligibility for employment, I just like to keep at least 4 years after that employee no longer works there, just to be safe. You want to make sure that you just keep that, because if the IRS comes in and audits you for, employment taxes or something along those lines, and you hired that employee 15 years ago, you don't want to have done away with some of their employment records. And so this tells you, periods of limitations. I don't necessarily agree with the 3 years here. I like to keep my minimum at 7, but obviously that's up to you. And then when your records are no longer needed for tax purposes, this is telling you, there may be other people or other entities that require you to keep them longer. Obviously, we're talking about tax purposes, and that applies for our purposes too. So how do you kind of store these? What is the best method? And so when you Google best receipt software for small business, you get a lot of suggestions, and I kind of want to go through these just really quickly. QuickBooks Online does have a receipt capture feature. So if you are utilizing QuickBooks Online, yes, you can use the receipt capture feature. Yes, it does allow you to take a picture of those receipts and save it. However, I would caution you with making that your sole place that you store those receipts, because QuickBooks Online is notorious for making it very, very difficult to move anything off of QuickBooks Online. Okay, so it is extremely difficult to get those receipts off of QuickBooks. And they say, that maybe they will tell you, oh, it's easy, you can do it this way. in my experience, it is difficult to move things from QuickBooks. So yes, the receipt feature is nice. It's not my go-to just because I think it's difficult to back them up and pull them off. But you can use QuickBooks Online. It does have a receipt feature. There's a lot of different bookkeeping softwares that you'll see down here. Same thing, I just like to have a third party that I save documents to, unless that system makes it easy to back up, and then I just back that system up regularly. Odoo is kind of a newer system that we've been having clients work with, and Odoo has a nice document app in it that I think is pretty robust. So utilizing Odoo, I have a little bit of a different opinion than what I do when it comes to QuickBooks. I like Odoo's receipt feature. It is nice. Just make sure that you're backing it up, right? So this is kind of what you'll see recommended from Google, and it'll say, okay, QuickBooks Online, Wave. Yeah, those are great. And yes, the receipts can live in there, but just make sure that you're storing them somewhere else as well. I would hate, like, if something were to happen with those files and then you can't get to your accounting software and you can't get to your receipts, you're in trouble. So I don't love that. Expensify is one that is recommended that I've actually pulled up because I really like this software. I think that this is a great software. It's really easy. It can also, you can set up employees in here to allow employees to submit receipts, and you can approve employee expenses and that kind of stuff. I think this is really nice. It also allows you to create corporate cards, and Expensify is not that expensive. It's got kind of a weird little platform when you log in. It's got some kind of like weird graphics, but I really quite like it. So it's got receipt scanning, expense management. It's got travel right in the app. You can have the Expensify credit card if you want. You can apply for it. You can have virtual cards, so you can send virtual cards to employees to make purchases, and you can change the limits there pretty easily, and so those employees can be approved for larger limits if they need to make a larger purchase, and then you can bring them back down to lower limits to prevent theft, which is a really large issue in small businesses. So you can do a lot of things with Expensify. I really like the software. I think it's a great program. They have a free trial, so I quite like it. Expensify is a great option. Keeper is another option for receipts. I don't personally use Keeper, but I have some kind of people in the accounting space that use Keeper for their firms, and they love it. So receipt management and Keeper, I think the pricing looks a little bit different than Expensify, but I've heard that it is a phenomenal resource. So Keeper is also an option. Ramp, which is spelled just the way it sounds, R-A-M-P, Ramp, is a nice receipt capture software. It is really focused on providing corporate credit. So that one has a little bit of a different feel. It has a lot of the features of Expensify where you get these corporate cards and employee cards. But Ramp really pushes you to apply for credit with them as you set your system up, which can be a little frustrating, but Ramp is also a good solution that I've utilized with clients. So Ramp's a great system. All of these are good options for keeping your receipts. I would suggest that whatever you do, just think about the number of people that are going to need to be able to access that system, what controls you can put in place to limit their access to all of the corporate kind of spending that you don't want them to see, and how those employees can go in and submit receipts. How can you make sure that that information looks good, that those employees are spending where they're supposed to be spending, they're not spending where they shouldn't be, and how it keeps your employees accountable. Because I have seen a lot of great softwares now that kind of help you with that, and a lot of small businesses have issues with employees, unfortunately, making like a lot of personal purchases when they're issued cards. So Expensify is what I'm going to recommend. I quite enjoy Expensify. I think this is a great system, but there's a lot of different options out there. Other options, if you're looking for something that's free, Google Drive works. If you're paying for Google, Or if you have like a free Gmail account, Google Drive works just fine. Google Drive, you can organize your receipts. I tend to like to organize my receipts by year, and then I organize by month. And then large vendors that have a lot of bills and receipts and that kind of thing, I'll make them their own folder in there for that particular month. Or I'll just put, receipts in to that month's folder. So Google Drive is a perfectly acceptable solution for receipt management. Expensify and that kind of stuff, that's going to be a little bit more robust, and I think that you'll probably like it better once you start using it. But if you're looking for a free solution, use Google Drive. If you are using OneDrive, use OneDrive. Google Drive, OneDrive, those are absolutely reasonable, perfectly acceptable solutions for receipt management. They don't necessarily integrate with a lot of bookkeeping software, but that's okay, right? So that hopefully was helpful. If you have any questions about what you need to be keeping, let me know. As kind of a refresher, make sure you keep your receipts for purchases, any sort of bills, shipping receipts, keep those. If you have bank statements, credit card statements, you should have those. Make sure that you save those. Copies of checks. If the check images are not saved on the statements, make sure you save the copies of the checks. That's going to be important. Deposit slips are also important if they don't come on the statement itself. Make sure that you are saving copies of deposit slips. Sales system reports, make sure that you save those. And make sure that you are saving payroll information, payroll reports, all that good stuff. Anything that is related to expenses or income in your business, you should be documenting and saving. You should be keeping them for, I recommend at least 7 years. Sometimes you need to keep them indefinitely, like if you don't file a return or you file a fraudulent return, which obviously I don't recommend doing. But, in that case, you have an indefinite audit window and you need to make sure that you're keeping your receipts. If you have any questions, let me know, and I will see you guys next time.